Okay, so here in this video, we are going to be going over everything you need to know for this upcoming week. We are going to get another speech from Fed Jerome Powell, some very important economic data coming out, and earnings season just doesn't end. So I'll go over the economic calendar, the earnings calendar, and my expectations for Tesla stock this week. Are we going higher? Are we going lower? What are our important levels to be watching for Tesla? What's my overall opinion here? And how is the options chain positioned for this upcoming week? All of this and much more. First up, hit the like button and subscribe to the channel because it's free 99. And it does help an upside down Tesla investor, well, spread the Tesla message. First up, let's start with the economic calendar. And earnings season pretty much doesn't end anymore. You have some random companies across the board reporting earnings. You got Playboy here, you got Braze, Restoration Hardware, Rumble, Urban Grow, Wednesday after hours, GameStop Tuesday and after hours. Some notable names here, but just a lot of random companies most of you guys have probably never heard about. But the earnings continue to roll in, and you want to think sectors here. Restoration Hardware, that could affect other companies in their sector of the markets. Same is true for McCormick or for GameStop or for Rumble. But for the most part, we are past our important earnings. But then again, bank earnings will be starting here in about 2 weeks, and then it's back to Tesla, back to Netflix, and other big names again. Let's now take a look at the economic calendar. Now, Fed Bostic speaks at 8:25 in the morning tomorrow. Fed Bostic spoke on Friday also, and he said he is now only expecting one rate cut. Now, I want to prepare you guys for some more hawkish commentary from the Fed, because what we've seen with the summary of economic projections was you did get the most dovish Fed officials get more hawkish on inflation and hawkish on rates. You can see here on this column, Wall Street didn't care about it at all, but they might care about it more when you actually start to hear different Fed officials talking more hawkish, okay? That's when the markets might realize, like, oh crap, we're barely at 3 rate cuts for 2024. If inflation doesn't really start to go in the right direction, we're gonna get 1 or maybe even 2 rate cuts. Now, I think the Fed, to be transparent here, is waiting for a reason, any reason at all, to start cutting rates, because at this point, they're more focused on the economy, especially given it's an election year, than just getting the last stretch of inflation lower. Let's also be honest. The Fed has been very effective in fighting inflation with the tools that they have. The federal funds rate, that's killed inflation in the areas in which the federal funds rate touches. Taylor Swift tickets, service, inflation is not going away based on what the Fed is doing. You need a recession for that to really go away. And I don't know if the Fed wants to have a recession, at least this year. Think services, getting your hair cut, your lawn mowed, Taylor Swift concert tickets, going to see a football game or hockey game. These different things, they're just more expensive. And the Fed raising rates doesn't touch those until people start to lose their jobs, aka a recession. But you could see here on this dot plot that prior to this latest summary of economic projections, back in December, the lowest expectation from any Fed official for rates by the end of 2024 was 3.9%. Now the lowest is 4.4%. It's wild that you did not see a change in the estimated Fed funds rate trajectory. We're still pricing in the 3 rate cuts, and that's what the market's really traded on. But if you look under the surface, the dots got a lot more hawkish on inflation and less of an expectation of cutting rates multiple times in 2024 from the average Fed official. This is not something that, again, was reflected in the markets last week, but may start to get reflected in the markets when we do get hawkish, speeches from Fed officials. The first of which is likely tomorrow at 8:25 in the morning. You will also get the Chicago Fed National Activity Index, expecting that to be negative 0.9%, and that will come out at 8:30 in the morning tomorrow. You will get new home sales for February, expecting this to come in at 0.67 million. New home sales month over month expected to rise about 3%. You will get Dallas Fed Manufacturing Index at 10 8:30 in the morning, expected to come in at -8. And Fed Cook will be speaking at 10:30. So again, it's any Fed officials from here, they're probably going to be pretty hawkish, and that's probably something the markets are not going to like. So definitely watch out for the Fed talk this week. Now, the first big piece of data we will be getting for the economy will be on Tuesday. Durable goods orders month over month will come out at 8:30 in the morning on Tuesday. You're expecting positive 1%. Last month was negative 6.1%. So when you're looking at a month over month number, if last month was negative 6.1%, a positive 1% reading is still not great because of last month being so negative. If this comes out negative again, that's where things start to look really ugly. And then a lot of secondary data comes out as well on Tuesday related to durable goods, but really markets are going to focus on that headline number. 9 o'clock in the morning, you will get S&P Case-Shiller home price month over month and year over year. Month over month is expected to come in at negative 0.1%. Year over year expected to come in at positive 6.8%. You will also get CB consumer confidence. That's expected to come in at about 106.7, right at where you were last month. So not expecting much of a change there, but it is bold and black here, and it can be a volatility catalyst for our markets. You will get Richmond Fed Manufacturing Index, Richmond Fed Services Index. That one's probably going to be the most important. You're expecting negative 12. Last month was negative 16. Likely the more negative, the better for the markets in this market where bad news for the economy is seen as good news for stocks. That only happens to a certain extent. When it starts to bring up fears or questions about a recession, then bad news will become bad news for the markets, but I don't think we are there yet. Now, on Wednesday, we are going to get some bond auctions, some treasury auctions, like the 17-week bond auction, 2-year FRN auction, but these can give the markets a move, but likely just not a, it's not going to make or break the day. Basically is the best way to put it. Fed Waller will speak at 6 p.m. on Wednesday, and that is pretty much it. Now, on Thursday, you will get GDP growth rate quarter over quarter, the final number for Q4. You're expecting that to fall to 3.2%. The last month's number, or last, number we had for Q4 GDP was 4.9%. So you're expecting a big drop for your final Q4 GDP number. The bigger that drop is, maybe the more bullish the markets are, but still lower GDP is not going to be great for just the overall markets. Give it some time. The markets will start to trade downwards on bad data. We will get initial jobless claims coming out Thursday at 8:30 in the morning as well. And then we are going to get Chicago PMI highlighted here in black at 9:45 in the morning. At 10 o'clock in the morning, Michigan consumer sentiment, final numbers. And at 10 o'clock in the morning, pending home sales month over month and year over year. And that is pretty much it for your Thursday. Now, Friday is actually the big day, the really big day for our markets. So the rest of the days, not going to be as important. Tuesday with durable goods, that could be important, but it's really Friday. 8:30 in the morning, you will get core PCE index month over month. That's expected to be 0.3%. Anything higher than that's definitely going to be bad news. Personal income month over month will be coming out as well, expecting that to be positive 0.4%. Last month was positive 1%. And you will get personal spending month over month. That is expected to be 0.4%. Last month was 0.2%. All of this data coming out at 8:30 in the morning. Really, PCE is going to be the big one there. If PCE does rise, more than expected, maybe comes in at 0.4%, that's going to be really bad news, and you're going to get the Fed even more hawkish and, expecting less rate cuts. I think you're really at the cusp of pricing in or expecting 2 rate cuts compared to 3. Really, if you ask the average Fed official, they're probably not pricing in 3 rate cuts in 2024 at this point. They're probably closer to 2 rate cuts. Just the way that the dots work and the way that they average them and put them together, it did show 3 rate cuts still. Now, you will also hear from Fed Jerome Powell at 11:30 a.m. on Friday. If there was anything that he wanted to say, back last Wednesday that he did not choreograph correctly for the markets, he will give you a change of tone. He will say something different. Not expecting that to happen, because Powell just went full bull. But if he does want to maybe get a correction going in the markets or something along those lines, he could bring up conversation about raising rates again if inflation does continue to kind of rise. And that would be problematic for our market. So Friday's the big day. Tuesday's also another important day with durable goods, but all the action is going to be this upcoming Friday. Now for the juicy part, we have Tesla stock. Now, Tesla is in a very weird kind of moment here because you're above your downtrending level of support. So you found support back here when Tesla went to the 160s. He kind of bounced up, got above that back into the mid 160s. That's great. If Tesla falls, your support, this trend line is going to be about 160 now. To the upside, you do have resistance around this upper trend line here. So you're right in the middle of two major trend lines. If you break up from here, then things get a lot more bullish to the upside. If you break down from here, things potentially get worse. Now, I will say the close that we seen for the markets last week wasn't fantastic, especially in after hours. The NASDAQ was down 0.15%. And in the last couple of minutes on Friday, you did see quite the drop. Now, I'm not going to draw any conclusions there. There's really nothing over this weekend that would say, stocks are going to continue lower. But with all of this economic data, I think there's a little bit more of a skew towards the downside for the broader markets. And why is that? Well, the markets are beyond fully valued right now. Things have to go exceptionally well. One would call perfect to support the valuations the markets are currently at. While I'm not expecting some kind of huge crash, especially on Friday, if Powell wants to correct some of the bullishness that he had on the last press conference, he can do so on Friday. So Friday makes me a little bit more concerned. I think Friday could be a very big day, especially with PCE. And, if that comes in hotter than expected, you're going to have some problems there as well. So the general feel for this week is the beginning of the week could be a little bit more bullish than the ending of the week. With that said, the ending of the week could be very positive, though, if PCE does come in lower than expected. And I do think that is a possibility. Last week in Tesla stock from hedge funds and institutions, we had 3,971 orders totaling $3.64 billion with a positive order value of 49%. So it was pretty much neutral. On Friday, you had a positive order value of 53% with 613 orders totaling $666.18 million. So Friday was a little bit more bullish. Thursday was very bullish. You had a positive order value of 78%. Now looking at this week ahead, you have calls about 54% of the open interest and puts about 46% of the open interest. So people are a little bit more bullish for this upcoming week than bearish. Okay, now if we take a look at the bubble chart here, the most active strike and on this expiration is the 180 call. You had volume of 35,000 on Friday with open interest of 34,500. So just a broad kind of perspective here is people are betting that Tesla stock rises this week, especially when you consider this huge strike here. The 175 call, you had volume of 65,000 on Friday with open interest of 22,000. It appears the options market is betting on a rise in Tesla stock. Now, some of you guys might remember this if you guys watch all of these videos, but just about a week ago, you've seen a lot of hedge fund and institutional money, about $4 billion, come into Tesla stock, but they were actually selling puts on the stock. Don't forget that, because last time that happened was on October 25th. And what happened? Tesla stock fell a couple more days, 3-4 days after that, and then started to rise and started to go through a pretty parabolic rally. Typically, when big money steps in and they start selling puts, that's a very bullish directional trade. Usually that means someone wants the stock to go higher. And when you're talking about hedge funds and institutions, individuals with billions of dollars, it's fairly easy for them to get the stock to move in the direction they want. So that was a pretty clear indication that we're we're probably in a short-term bottom here. It wouldn't surprise me if Tesla stock does rally in the beginning of the week and then takes a little bit of a breather, especially as you get close to Friday. Now, my overall general opinion here is I'm slightly skewed to the bullish side. Unless Powell is super hawkish on Friday, which I don't think he's going to change that quickly from last week being a super bull to this week being a super hawk, then Tesla stock is probably going higher from here. You have formed a very solid double bottom here, right? Where back-to-back 2 days, you kind of flushed out, hit lows around 160, and then bounced. That's typically a pretty good sign as well. It looks like you're really finding this holding pattern, this demand zone above 160 is holding very strong. I don't think you have as much demand above 180, and I think that's where the real test will come in. So I think Tesla stock could touch and approach 180 this week before settling back into the high 170s. Tesla's currently at 170, so overall, I'm expecting a bullish feel for Tesla this week. And maybe for interest rate sensitive names. Because let's be honest, if the markets are really wanting to go higher from here, it's probably going to be in your interest rate sensitive stocks. If the Fed is really going to cut rates that aggressive 3 times this year, and if the data starts to look poor, like maybe durable goods comes in weak on Tuesday, then you likely get another rally in small cap stocks. And to some degree, I am expecting the durable goods orders number will come in weak. And if it comes in weak, then logically you can expect interest rate sensitive stocks to do well. So based on that Tuesday and just maybe the overall catch-up effect that we probably need to see in small cap interest rate sensitive names, I would expect Tesla to rally in the beginning of the week and then sell off towards the end of the week. Maybe it's the opposite. Who knows? Maybe Tesla sells off, the markets sell off in the beginning of the week, and then they rally on Jerome Powell on Friday. That's always a possibility as well, but you are in a very weird state here. I will get a lot more confident in the bullish direction if we can break above this trend line here where my cursor is. I'll get, a little bit more cautious if we break down under 160. So I think those are the levels to be watching for. Roughly around 175, 176, you're going to break above this trend line to the upside. That's going to be great news if that happens. Under 160, you're going to break under this trend line and likely going to about that gap fill at 147. Tesla's MACD, this yellow line has broke above the blue line, so in the very short term, you have went bullish again, and the RSI is sitting at 39.62, which is still way under 50. Just to get back to neutral, which is considered 50, you're probably going to be in for quite a move higher this week. Does that happen? Not exactly sure. Does Tesla come out with news? Obviously, I can't forecast that. So if anything changes or deviates with Tesla, if we get good or bad news, that's obviously going to change things. But watch these trend lines here. Take a screenshot of this if you have to, or pull these trend lines up for yourself. This is connecting the gap fill level that you've seen on January 25th to the bottoms you have seen since, even coming back here to most recently in early February. That's going to be a level of resistance. You just seen resistance around here as well. 1, 2, 3, 4 days now. If you can get above that, fantastic. If you break under this downtrending trend line, which is a little easier to chart, just connecting the lows that you have seen back on August, in October, and more recently twice in February and now in March. You break under that, bad news. You break out above that, fantastic for Tesla stock. Now, personally, I want to see Tesla as low as possible. I want to be able to acquire as many shares as possible before the markets realize what is going on with FSD, the robo-taxi network that is coming a lot faster than people expected. And I think that is ultimately what gets Tesla stock hundreds of dollars higher from here. Mix in there Tesla focusing more on profitability going ahead. That's my expectation. And I think you're going to see a very strong second half of the year for Tesla. But again, I'm not a financial advisor. I could be wrong there. I want to take this time to buy as many shares of Tesla as I possibly can. Let me know what you think about this. Let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel. If you guys want to come trade with us, check out that link down below in the description of this video, as well as follow the X account. It is Michael Tyler over there. It costs you absolutely nothing to be a part of the action over there, so you might as well take full advantage of it. And you can see it's Michael Tyler over here. Same picture as the YouTube, so it should be pretty easy to find. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.